Renewed fears about an economic slowdown have rattled Wall Street and beyond in recent weeks, stoked by President Donald Trump and his top economic officials' refusals to rule out a recession. The technical definition of a recession is 2 consecutive quarters of negative growth in gross domestic product. The official quarterly GDP stats haven't turned negative yet, but JP Morgan Chase, the country's biggest bank, calls for a weak but still positive 1% GDP growth rate during Q1, though Wall Street recession indicators tilt towards higher odds of recession. And perhaps the most concerning signal is a breakdown in everyday Americans' conviction in the economy, as the University of Michigan's closely watched consumer sentiment survey tumbled this month to its lowest level since 2022. Many have pointed to the stock market as a reason to fear a recession. Stock prices don't completely correlate with economic growth, but the S&P 500 dove into a 10% correction last week, wiping out some $5 trillion in market value in less than a month's time. Trading in 2 of the world's most precious commodities signals that investors are looking for safe assets to invest in, certainly point to the prospect of a global recession. Gold prices are up more than 10% this year to a record $3,000 per troy ounce, and an international benchmark for oil prices sunk to its lowest level since 2021. However, despite a rise in the value of government-owned bonds, another sign that investors are looking for safer assets to invest in, the most common bond market signal of a recession, the inversion of the yield curve, in which longer-term bonds have lower yields than shorter-dated ones, has actually normalized in recent months. And the New York Fed's bond-linked recession model predicts that the likelihood of a recession in the coming year is currently 27%. This is a significant decrease from the more than 70% odds projected in late 2023, a period during which a full-blown recession failed to occur. For more on the story, read Derek Saul's story linked in the description.